good to have you join us today. Hello and welcome to Business Daily. I'm Lee Ji-yoon in Seoul. Let's get started with a look at the day's highlights. With protracted low growth and slowing demand from both at home and abroad, will things look up for the Korean economy in the new year? Koreans aged 19 or older are now able to use the automated immigration clearance system at Incheon International Airport, even without pre-registration. But first, Korea posted a current account surplus of almost $9 billion in November, continuing its surplus streak into a 57th straight month. The Bank of Korea, in its preliminary report, attributed the continued surplus to increased exports that posted 7.7% growth on year in November, reaching $46.4 billion. It's the first time the export value has increased on year in 2.5 years. Now, breaking it down by sector, outbound shipments of machinery and equipment shot up more than 20%, while exports of steel products and semiconductors surged 12% and 11% respectively. During the same period, imports spiked 10.5% on year to the tune of nearly $36 billion. Korea's foreign exchange reserves fell again in December, marking a downward trend of 3 straight months. According to the Bank of Korea, FX reserves dipped to about $371.1 billion last month, dropping roughly $880 million from the previous month. The central bank says this is due to a decrease in the value of non-dollar currencies like the yen and the euro on the back of a strong dollar trend. Holdings in gold bullion, on the other hand, remained unchanged at about $4.8 billion. As of the end of November, Korea was still the world's 8th largest holder of foreign reserves, with China, Japan, and Switzerland leading. In light of the country's weak recovery momentum, the Korean government promises to tackle looming uncertainties, reiterating that it will execute a hefty portion of the New Year budget in the coming months. Our Kim Min-ji reports.
The Korean government will tackle rising risks at home and abroad in the new year and implement policies to maximize the use of opportunities presented. Speaking at the first economy-related ministers' meeting of the year, Finance Minister Yoo Il-ho said despite the modest recovery expected in global growth and trade, there are many variables ahead.
There are concerns of increased protectionism under the incoming Donald Trump administration, as well as the potential for further policies that prioritize the U.S. economy.
Minister Yoo said Korea will keep close tabs on the situation while stepping up communication with the new U.S. government to establish cooperative bilateral ties. Yoo will be in New York next week to meet with major investors, where he will explain the country's policy direction and current economic conditions. Korean officials from the Foreign Ministry will also meet with their U.S. counterparts to build an economic relationship with the incoming administration. In a separate meeting on fiscal spending held the same day, the finance minister vowed to take aggressive fiscal measures to breathe life into the ailing economy. He said unfavorable internal and external conditions will likely weaken the country's recovery momentum. The government is predicting the economy will expand 2.6% this year, down from its early projection of 3%.
Looking at the current domestic situation, with slumping consumption, weak consumer sentiment, and the ongoing political turmoil, it seems that corporate investment will also slow, so it's likely the government will lean towards fiscal spending. With the Bank of Korea not in a situation to lower rates further, the government may also need to draw up an extra budget in a timely manner.
To tackle a possible economic contraction, the government has vowed to front-load roughly 30% of the 2017 budget in the first quarter. Minister Yoo called on related ministries and agencies to implement the budget accordingly, adding that the government will strive to ensure the general public can feel the effects. Kim Min-ji, Business Daily.
As we look at the year ahead of us yesterday, we discussed how the global economy would do this year. And as a follow-up today, we're going to delve into the Korean economy and what lies ahead. To tell us more, our Shin Se-min joins us in the studio. Hello, Se-min.
Hi to you.
All right, so to start off, what's the overall picture looking like for the domestic economy for this year?
Well, to give you an overview, the general growth projections put out by Korea's prominent economic research institutes in general, things look gloomier compared to the earlier forecast from last year, and this is what we have. If you look at here, the Korean government, often criticized for its rosier outlook, cut its forecast to the mid 2% range from 3%. LG and Hyundai Research Institutes both put growth in the lower 2% bracket, and Korea Economic Research Institute placed growth at 2.1%. And breaking it down, according to the central bank, private consumption is expected to fall this year, while consumer price growth is likely to go up. And in terms of added jobs this year, figures are likely to hover around 260,000, given that 1% of economic growth roughly translates to 100,000 new jobs. And the country's main economic driver, exports, are likely to post 2.9% growth, while imports will also expand by 7.2%. And these relatively subdued figures come on the back of a number of factors at home and abroad, like the new U.S. administration, the Fed's rate hike scenario, and Korea's local political crisis.
Now, Se-min, you briefly mentioned exports, which went through extremely rough times in the past 2 years. So does it actually look like that we'll see a turnaround this year?
Well, on that, experts I talked to seemed optimistic, with some of the players that have to do with the ongoing fourth industrial revolution expected to show stronger performance.
With demand related to the fourth industrial revolution expected to grow, especially in the field of artificial intelligence, many Korean tech players should see some improvements this year. Korea's IT-related industries like semiconductors and OLED display manufacturers will see better performance.
One of the prime examples would be Samsung Electronics. The experts said that despite the Galaxy Note 7 flop last year, things won't be as ugly as many had predicted. I mean, for one, last quarter we did see prices of the company's steady breadwinner, semiconductors, shoot up. And with the incoming Trump administration's economic plans to boost the U.S. economy, starting with its own infrastructure, Korean manufacturers are also hoping to see some gains. And on top of that, local businesses across the oil-related sectors like capital goods, steel, and petrochemicals will rake in more profit on the back of rising global oil prices.
Now, going back to the U.S., the Fed's monetary policy will no doubt be factored in, but we constantly hear about concerns surrounding capital outflows from the local market. So how are things looking on that front?
Korea is considered to have solid fundamentals when it comes to its foreign exchange reserves and its low short-term debt ratio. So in that sense, market watchers say that differentiates Korea a bit from other emerging economies.
Korea's financial market will not be swayed much by outside factors, putting the stock market this year on a solid footing. And on top of that, strong U.S. economic growth is likely to benefit other economies around the world, leading to more profit for local exporters.
He adds that with the country likely to see its presidential election earlier than initially scheduled, that'll provide more stability, calming existing jitters. But then again, we should keep in mind that economic performance in the real economy doesn't necessarily translate into performance on the stock market. The government, for its part, at the same time, will be implementing new policies to drive up growth. And as you heard earlier from Minji's report, it already has plans to front-load some of the budget this year.
Right, and there's already talk of potentially drawing up another supplementary budget, so keep us updated on that.
Sure.
Thank you so much for coming in today.
My pleasure.
In another sign of trouble for Korea's ailing shipbuilding sector, the nation's shipyards have slipped below their Japanese rivals in terms of backlog orders for the first time since 1999. Global research firm Clarkson Research Services says the preliminary amount of backlog orders held by Korea last year stood at a little under 20 million compensated gross tonnage, or CGT, lower than Japan, which has slightly more than 20 million CGTs. In light of slumping global demand, backlog levels for both Korean and Japanese firms have been on a decline, but those of local shipbuilders did so at a faster pace. More than half of Korea's stock-rich have become wealthy by inheritance, making the phenomenon more prominent than in other countries. According to CEO Score's overall analysis of 40 top stockholders, each from Korea, Japan, the United States, and China, 70% were self-made entrepreneurs, and the remaining 30 were born into rich families. Among Korea's stock-rich, 62.5% were the beneficiaries of inherited wealth. This compares to 25% in the U.S., 30% in Japan, and 2.5% in China. The size of assets owned by those who built their wealth on their own rose over 142% from 2007 to $1.3 trillion in 2017. For heirs, the corresponding figure rose just about 35%. When you're processing through an airport, perhaps the most dreaded part is waiting in the long line for immigration. But starting in the new year, the lines could move even faster at Korea's airports thanks to an upgrade to what's called the Smart Entry system. Our Eunice Kim tells us more.
It's the dreaded peak travel season rush. Once through security, Korea's automated immigration clearance system allows for travelers to check in on their own, with their pre-registered facial and fingerprint data verifying their identities. But to use the Smart Entry system, they have to register their biometric data and passport ahead of time.
It'll be faster when I go through immigration, but there are a lot of people here waiting to sign up for the service too.
That is, until now. Beginning Tuesday, Korean citizens 19 years and older are able to use the Smart Entry system even if they did not enroll in the program on their own time. The system now retrieves fingerprint data on police records. Incheon International Airport kicks off the test run, and it's set to be applied to all domestic airports in March.
If more of our citizens use the automated checkpoints, we can offer our foreign visitors a faster, more convenient service.
Foreigners residing in Korea can still use the automated system with pre-registration. Simply place the photo page of your passport on the reader. Once the door opens, look up at the camera and place your index finger gently on the scanner. Once the system matches all the properties, you can be on your way. Korea Immigration Service suggests not rushing the steps for swift processing. It also says citizens who have changed their names recently or had their state ID cards issued more than 30 years ago should pre-register themselves to avoid any errors at the gate. Eunice Kim, Business Daily.
Now, fast internet speed is something that everyone can appreciate, but work is in progress to make that connection even faster. We look at some of the latest from the field of telecommunications and how that might affect users across the country. Our Lee Ju-young has the details.
Korea is known for having the world's fastest internet, so it's no surprise that the country is striving to be the first to offer a fifth-generation mobile network. One of the nation's largest telecommunication firms, KT, says it will complete the construction of a pre-standard 5G network by September this year, in sync with its aggressive timeline to provide services for the 2018 Winter Olympics in Pyeongchang, Korea. The fifth-generation wireless system is designed to significantly reduce latency, allow a higher number of mobile broadband users per area unit, and increase the speed by about 12-fold over the current 4G network. Another big change in the telecommunications market will take place in the latter half of this year, this time in the form of smartphone subsidies. Korea Communications Standards Commission says it will lift the upper limit on smartphone subsidies in October to spur market competition and increase customer benefits. After the Mobile Device Distribution Improvement Act took effect in 2014, mobile carriers have been banned from providing subsidies over $280 for new phones, in effect stopping telecommunication providers from offering the latest handsets with steep discounts. While eased regulations are set to benefit customers, experts say there are still other restrictions that need to be revised in conjunction to ensure that customers can reap the full benefits. 이주영, Business Daily.
And that brings us to the end. Thanks for watching. We'll be back with more tomorrow at the same time, same place for your Business Daily. Until then, goodbye.